And it's time for the word on Wall Street. Top investors watching your money. Joining me now, Michael Lee Strategy founder, Michael Lee, and market strategist, Catherine Rooney Vera. Mike, want to start with you. The big news this morning, obviously on a Monday, regulators just a couple hours ago seizing First Republic Bank, agreeing to sell to JP Morgan. JP Morgan will assume all of First Republic's deposits and buy most of its assets. First Republic is now the second largest failure in U.S. history as far as banks go. The stock halted in the pre-market, down almost 46%. I spoke to Odeon Capital Group Chief Financial Strategist Dick Bove to get his reaction to the news. Watch what he had to say, Mike.
I think that what you can expect to see going forward is that entrepreneurs who understand the market will continue to attack these banks, seeking out other ones that they can drive into bankruptcy because it's a highly profitable effort to do so. The government is going to have to shore up its massive weaknesses in terms of bank regulation by going in and increasing the real equity of the banking system.
So, Mike, Dick Bove seems to think that it's not over, that there's other opportunities here and that others are going to go after other banks. That's one opinion. Other opinions say that this ends the crisis and that, the banking sector is going to be stable after this. What do you say?
Yeah, look, it's really hard to say where the next bank next bank failure is going to come. I'd imagine there are going to be dozens, if not more, over the course of what looks like to be an incoming recession because of the commercial real estate problems that are out there. This bank failure, First Republic, was literally just a run on the bank as a result of Silicon Valley Bank through venture lending. And all the banks that have exposure to venture lending, with the exception of PacWest Bank and Comerica, are now no longer. So Signature Bank, Silicon Valley Bank, First Republic Bank, all gone. And so JP Morgan was a strategic advisor to First Republic since the failure of Silicon Valley Bank. They have a good look under the hood. They know exactly what they're buying. I imagine this will be an extraordinarily profitable transaction for JP Morgan because a lot of the assets that had to be marked down, the bonds, the long-term bonds and their held-to-maturity portfolio that are deeply underwater, well, now when you stick them on a JP Morgan's balance sheet, which is well in excess of $1 trillion, they have a time horizon to wait for the interest rate cycle to go back to where short-term interest rates go back down to 2% or 1% or even 0%, and the value of those bonds increases substantially. First Republic was a very good high-end bank for high net worth customers. That is no longer. It is unfortunate they're out of the marketplace, but no bank can handle a run on the bank, and this was really a crisis of confidence after Silicon Valley Bank. But look, I think there are issues, and you're going to see them regionally in tertiary markets outside of major cities, particularly in blue states where office buildings are only a quarter or 30 or 40% occupied, down from 90 or 95% pre-pandemic. To me, that is the next shoe that drops, and it's really hard to know which bank is going to be next and how much of their balance sheet or how much of their loan base is in office buildings that have very low vacancy.
Okay.
It's something like 2/3 to 3/4 of all commercial mortgages on small and medium-sized office space are held by regional banks. So I think there will be many more bank failures. It's hard to put your finger on which ones it's going to be. But if you think about the small office buildings around your metropolitan area, it's not JP Morgan and Bank of America and Wells Fargo that hold the notes. It is a small and local bank. That is their bread and butter, and that to me is where the risk sits.
All right, Catherine, I want to move on to the other big